It's been nearly a year since AT&T announced that they'd be spinning off their WarnerMedia assets into a separate entity. The deal is finally complete, and there's a bright future for both companies ahead. So in today's video, we'll be going over the deal itself, what I'll be doing with my shares of Warner Bros. Discovery, and much more. And guys, just before the video starts, my name is Ryan. I'm 16 years old. I do long-term dividend growth investing on my YouTube channel. I go over news, portfolio updates, and much more. So make sure if you're new here, smash the like button, subscribe. My goal by the end of the year is to get to 150 subscribers, and we're already 30 away from that, which is amazing. So it would mean a lot if you guys could do that real quick. Also, join the free Discord, link in the description, and of course, roll the intro.
Hello, I like money.
If you guys haven't already seen my AT&T stock review, go watch it. It's very recent and still very relevant to this video. But nearly a year ago in May of 2021, AT&T announced that they would be merging their WarnerMedia assets with Discovery and forming a new company, Warner Bros. Discovery. Since the announcement of this deal, the stock is down about 20%. Many investors sold their shares since AT&T announced they'd also be reducing their dividend by around 50%. But in the long term, this may have actually been a good thing. Now, a new regime has started for both of these companies. AT&T is now a much more focused company on their telecommunications business and has room to invest more money. They're going to invest the dividend income that would have been paid out to shareholders in internal growth opportunities that would result in long-term capital appreciation and dividend growth. CEO John Stankey explains this concept in this interview.
You know, when you think about the dawn of connectivity that we're in that's going to enable many of the things that he's addressing and what the future is, our company is the fabric that a lot of that innovation runs on. And we believe this is an opportunity for us to invest at a level and drive some improved returns. And I'd much rather be pouring some of that cash back into the infrastructure of this business that returns at a higher level than what we pay out on the dividend. And so it's time to make that transition for this company. And we've got a lot of great opportunities and great assets to actually drive better value.
AT&T still has a really nice dividend yield too for the stock. It's also still at a pretty good value in my opinion, and as mentioned before, a much more focused company. So my thoughts on AT&T stock have really not changed at all. I think it's still a really good telecommunications cash generating machine that will provide good dividend income for the long term, and hopefully now, since they're going to be investing this money, good capital returns in the long term. So for every one share of AT&T that you would own, you'd be receiving 0.24 shares of the new spin-off company Warner Bros. Discovery. I'll get to how much money I received from Warner Bros. Discovery and what I did with those shares later. I think WBD has a lot of potential with HBO Max. They have good brand value and are doing some interesting things with streaming services. For example, they just launched a CNN streaming service which hasn't been doing too good.
You are fake news.
I think the stock price is going to be undervalued for a bit just from people selling out of their shares. But I think long term it has a potential to be a big player in streaming services and could be a really good company to hold. So what did I do with my Warner Bros. Discovery shares? Personally, I sold my shares because I recognize that Warner Bros. Discovery doesn't fit in with my long-term portfolio goals. To start off, they don't pay a dividend, which obviously isn't a make or break for me, but it didn't help their case one bit. But I think Disney, which is one of its competitors, is just such a better company to invest in, and it's one of its competitors, as I mentioned. I think Disney has a better economic moat and much better brand value than Warner Bros. Discovery as well. So I received $96 in my shares from Warner Bros. Discovery, and I used that money to just buy back into AT&T. My three options were to rather hold for the long term, invest in a high quality company, or invest the money back into AT&T. It all depended on how much money I actually received from the shares, which was unknown. But I felt that I'm underweight in AT&T, and I think it is still really at a good value long term. Another thing people have been asking me is why AT&T stock is at $19 now. The stock price had an adjustment because of the WarnerMedia and the Warner Bros. Discovery spinoff and the money that you'd be receiving from that. So if you just bought in on April 4th and we're just trying to hope to get an easy like $20 or whatever, that's not how it works. You'd be losing money but gaining money at the same time in the Warner Bros. Discovery shares, if that makes sense. AT&T would also have to be revalued because it would be overpriced if it didn't, include the WarnerMedia assets that they obtained. So I think in conclusion, Warner Bros. Discovery, it's a good company and it depends on your investing goals long term if you want to hold it or sell it. I hope you guys really enjoyed this video. Also, if you do enjoy content about AT&T or any other dividend stocks, as I mentioned guys, I'm trying to get to 150 subscribers by the end of the year. Smash the like button, subscribe, turn on post notifications, do dividend stocks, not drugs. Have a great Easter Sunday, and of course, roll the outro.